want to talk about the higher low, because as we have an uptrend, the higher low creates our support. Support means trend continuation, but when price breaks below that support, we all know that we're going to get a downtrend and lower she goes. And a lot of times we use these outside consolidation patterns to show support. But what I want to focus in today is called the armpit trade. I know, sounds disgusting. And what we have to remember is in an uptrend, you have these impulse waves. And with inside an impulse wave, you'll have another Elliott wave formation. Kind of like what we see here, impulse waves. But really, this impulse wave should look like this, having an Elliott wave inside of it. Why is this important? Because as we said before, as price goes up, these corrective pattern lows are our support. And once we break that support, price should continue lower. And we can wait all the way till price comes down here before entering into the trade, but that seems like a lot of potential profit missed. And that takes me to the armpit trade. Using these lows as support and drawing your line over, that would make sense. But then you can see that you're still making higher lows. And once price breaks below here, you're able to catch a lot more profit as price falls off. So how did we do that? Well, again, we use the outside as support, then followed up the impulse wave lows, drawn a line across to see when it would break. All right, here's an example. So if you take the outside lows, create a channel, that would be typical. But if we start looking at the lows inside this impulse wave, it would make sense why this price fell off so hard. We take the lows, draw an outside channel. This one shows up maybe here or here. As you can see, price made this little back and forth double top, which we had diagonal resistance also, giving us a little bit more definition on why this fell down so hard. We have the lows, make our channel, then we get this nice impulse wave. Candle there makes our highest low right across the bottom, shoots back up, retests that resistance, and then falls off lower. We have higher lows going up, then off of our impulse waves, we have lower highs going up. We could wait for price to break all the way back down here lower before declaring this a downtrend, or we can use these lows off the impulse wave and make all this profit back down to support before breaking and going lower. Here's another one in our watch list. Low, higher low, trend line up into the impulse wave, low, higher low again. Now we can see the reversal pattern happening quicker. Low, higher low, draw your line over support, impulse leg up. This one gets tricky because you have this big impulse wave spike, but right here you have the impulse higher low, draw your line over. As price breaks below that, gives you the signal, comes back up, you enter into the trade because it's up against resistance, range box duplication, and it goes lower. Down to support, even to where you are right now. Low, higher low, maybe even another, and draw your line across, impulse wave up, support, make it a higher low, and another. Just because these have more candlesticks or make bigger moves, we tend to only view that as support, but we need to keep our eye on the Elliott wave impulse up. There's a lot of money to be made on these little pullback candlesticks as price breaks and goes lower. Here's another look on play. We're up against resistance, and so if we didn't get in at that resistance point, now what? Remember, we only have 3 trades. It's counter trend or reversal or trend continuation. Trend continuation, we need a downtrend. So now we're making higher lows and there's the support. So technically you would need to make sure you broke all the way down below this before declaring this a downtrend. But identifying the armpit of this impulse wave means now when price breaks below this line and comes back up into resistance, we can take a trade here, gaining all the profit back down to support. Here's another alert, outside support. Then we have this impulse wave and right here we break below. And right here's the lower high showing us resistance, and you're able to catch all of this profit instead of saying this is the low back here because it has a lot of candlesticks. Is it a perfect system? Nope. As you draw up and you break down, you come back, you retest. This wasn't a very big move, so it wouldn't have been worth it, but we don't know that until you enter into the trade. Just a little bit of knowledge there. So instead of waiting for the Elliott wave to turn into an ABC pattern and break below, this will get you in a little bit quicker. Not all trade results are the same, so remember, micro trades and have a plan to double down if it goes up against you into new resistance.